Based on your understanding, how carefully is the Fed looking at markets and market reaction in determining and plotting their path forward?
Well, of course, they constantly emphasize they're looking at all the information, including domestic and global, real economic inflation and financial information. I think, again, I agree at least in part with Jeff. By talking more specifically about risks and uncertainties, the Fed would actually help the markets.
How do they
a problem
do that,
that happened in well, I was going to say a mistake they made in 2004 was to lock in a rate sequence very tightly that just eliminated uncertainty for a while, and that encouraged, I think, adverse speculative behavior. If the Chair Powell today needs to be the wise physician, he's the family doctor. He's talking to the public in the financial markets, explaining, here's our outlook, here's what we're not sure about, here's what could go wrong, here's how we would respond to it. One scenario is the economy picks up speed, inflation starts to surge forward, and the Fed would need to respond to that. Of course they would. But certainly other scenarios are ones where the economy slows further, and the Fed also would be ready to respond to that. Markets know there are risks. There's no surprise here. But I think it's important for the markets to understand the Fed is not on hold. The Fed can't be on hold. The Fed has to be prepared to move quickly and forcefully in some circumstances in responding to changing data.
Andrew, do you think that, as Jeff pointed out, there's been, a lot of this is market volatility is just reaction to what the Fed says it's been going to do. This is obviously the result of forward guidance. I mean, has the Fed just become the victim of forward guidance, and that every time it says something, the market, takes it maybe too literally and begins to run to extremes?
What you're calling forward guidance, I will call overemphasis on a benchmark outlook. A good organization identifies material risks and they develop contingency plans. They don't just have a benchmark outlook. That's the direction the Fed needs to go in improving its strategy and the communications this year, is to try to be a good family doctor explaining where's the uncertainties, where are the risks, what's the contingency planning.